Hi everyone, welcome back to Be Rich. Yes, yesterday's video was recorded the day before, so I couldn't answer a lot of the comments which came in. A lot of you are happy that I'm looking at the comments and I'm trying to offer my views on your comments. So, on that same effort, I thought I'd quickly run through the comments and offer my insight or my feedback or my rebuttal to your argument, and then we'll dive into the video which I promised yesterday. First is Equity Atlas, Pfizer and Duke Energy competitors video. Well, you just given me another idea for another video. So maybe I'll do Pfizer. I did speak about yesterday with AstraZeneca, the global pharma value wars I spoke about yesterday. So that is done. This defensive dividend utility play, I should do that maybe tomorrow. I'll dive into the utility stocks in the US, which are high dividend, and what should be the play in that, which are the companies in value in that. That is something I can dive into. Equity Atlas. Vinod Narayanan, U1H, says Tata Index 150 mutual fund. Is it good? Hey, it's a value passive fund, so it has nothing wrong in it. But depends on where your investment journey is. And if you're looking at horizons of 10 years plus, I guess it's okay. Maybe it'll do a little more than a Nifty 50, but it's about the same. But do remember, value investing is not about picking broad indexes like this. It's about undervalued stocks, finding them and investing in that. So if you like this Tata Index Mutual 150 fund, pull down the list of companies, the 150 companies, dive into that and see if there's any value in those 150 right now, and maybe you can look at those. That could be a strategy. That Tata Passive Mutual Fund 150 mid cap or whatever you're looking at, has 150 companies, and then you sit and spend time looking at these 150 companies. Yes, I can do a video about that, but unfortunately I've been barred from doing Indian content on this channel, so maybe it'll land up something on MoneyPitch. Maybe I should do that on MoneyPitch in Tamil. I don't know. I'll think about it. Guys, give me feedback if I should come and do videos in Tamil in MoneyPitch for basic videos like this instead of talking, stratospheric things like what Anan is talking about. Anyway, that is something to think about. Gautam Money J 5263. Why is yield still high if everyone's buying short bonds? Okay, first of all, there's no dumb questions. He's worried that he's asking dumb questions. Especially when it comes to bonds, it's never dumb. It's always to ask is better than to assume, especially in a complicated instrument like the bond. The thing is, the short-term bonds which we are talking about are 3 months, and those are very close to what the Fed is in terms of policy rate. And the Fed's policy in the US is very high, so these bonds usually are very close to that and they're very high. Bond prices and yields move inversely, but the T-bill usually, is always issued at market clearing yield. So this is a short-term one. So unless the Fed starts aggressively cutting interest rates, you're not going to see these yields drop tremendously. So short-term is less about market trading, and it's more about monetary policy and anchoring to that rate. So I hope that you can able to understand, Gautam, that this is a very short-term bond, so it's more reliant on the Fed's interest rate than market trading. Long-term bonds, all like the long 10-year, 30-year bonds, those are all traded in because they're issued and they're sitting there, and those are traded in. But these are very short. I hope that helps. Prasha 88. Why Japan if GDP is falling and population is declining? I love this. It's a good question. Why, as a value investor, should we look at Japan when the GDP is falling? And this is a good dilemma for a value investor. Yes, Japan is sluggish, population is shrinking, but the stock market and the economy in Japan is still sitting on a lot of cash and global patents. Same things we look at. So you have to learn to differentiate Japan's population, demography, and economy separate from the companies. The company and happens to be in Japan, but they're sitting in a lot of patents which are still used. Like Sony still makes most of your mobile phone cameras are made by Sony. Even Samsung is using Sony. So they make very highly engineered products, and they're leaders in that. And they have very strong brands. And this is a mean to the revision bet in Japan, meaning they've been out in the doldrums for a long time, and we are betting that things are going to improve for Japan and it's going to get there. And you're buying a world-class business, and at these valuations, I think they're great. So try and do that. Your question is very good. And sometimes value investing can sound contrarian, but do try to differentiate what I'm saying here. We're talking about two different things. Like even in India, demography problems are there. We have demography, sorry, not democracy. Some of you might misunderstand that. That's not democracy problem in India. Demography, which is the population. There is certain down south states, the population is declining. Northern states, it's increasing. All that is true. And our GDP and our economy, all those things which are happening there is true. But Indian companies per se, if you see, there are value companies in India. So same way you cannot write off, Indian companies like that. Same way you cannot write off Japanese companies. I hope that gives you some clarity, Prasha. Narendra, this is very hard to pronounce because I don't know why the word name breaks in this. Narendran, I just say Narendra or Narendran. Okay, you're talking about Unilever, PG, Procter & Gamble, that is, P&G. So I did do videos on this. So you just have to go back and look at the catalog. You'll find the videos in this. And if you're not able to find the videos, put it in the comment and I'll ask Rupesh to reply to you in those comments and let you know where you can find these videos. Shivram 8513 suggests bonds in the US and UK to invest. Well, in US, it is the ultra short bonds which we're looking at, SGOV and BIL, and there are ETFs which are this, so which you can research and Google and find out. In US, gilts is currently interesting due to the rate expectation softening, so you can also dive into that. And you can use, like I said, interactive brokers is what I use, so you can, if you're in the UK, I'm sure you would be able to find local brokers over there and platforms which will be able to help you out. But I will try and do a video separately on this too, like I spoke about the defensive stocks and talk about specific bonds in UK and all that. But that'll take me some time to research, but give me some time. Ram Sundar W7C, why PEG ratio and should it be under 1? Well, PEG ratio is like PE ratio, Ram. It's a great thing to see in terms of numbers, but it's not the only thing you should see. What is PEG ratio is take PE ratio, but put, growth also into it. So to tell you if you're overpaying for a stock, that is what PE ratio is. PEG ratio is a further analysis of that. Usually if PEG ratio is less than 1, it's considered value territory. And if it's above 2, they say you have to be cautious unless growth is going to be explosive for this company. So it depends on where the company is in terms of its own life cycle, small cap, medium cap, large cap, that matters, where it is in terms of product, So you have to factor in a lot of things before just taking PEG ratio as something you just look at blindly. PEG ratio is a great place to start, but it's not the end of all things. So if PEG ratio is below 1, you can say it is in value. You can start investigating further. If PEG ratio is above 2, all you know is, okay, you have to understand why is that PEG ratio. Is it valid to have a PEG ratio that high? Is it okay to invest in this? So it's a great screener to start with, but it's not the end of all things. Like I said, you have to understand the business before you start investing. Sheikh Himsha says views on ASML, AMAT, SMCI, MELI. Okay, these are all quality and growth businesses. Okay, ASML has monopoly in EVU and has a strong moat, but in terms of valuation might be high. AMAT is a good alternative, but slightly better in terms of value metrics. And SMCI is a hype stock, needs more margin stability is what I would say. And MELI is a Latin American Amazon, needs PayPal kind of company. Great moat, but very volatile. So that's like my quick assessment of this, or my 2 cents for this. And maybe I can do a video on this too. I don't know. I'll think about it. Chitra Rajan Ramanna, A1839. Man, I'm loving you guys. LinkedIn profiles. Yes, absolutely. I'll ask Rupesh to put my LinkedIn profile here and Anand's LinkedIn here. And maybe we can pause for a minute. And there you go. I hope you got the QR code. If not, you just have to go search for Anand and my name on LinkedIn. I made sure Anand is also been verified and I'm verified. So make sure you click on the LinkedIn pages. I know there are a lot of people who are spending a lot of time trying to be me and Anand. I don't know why. Anyway, so Vijay Radhakrishnan 4939 video on Instantric Value. I've done many of these, discounted cash flow, what my views are in it, And if you just go rewind and look, you'll find it, man. Okay, it's there in Tamil and in English. Shashwat has also done some videos on this. So it's a question of just searching. You can't be asking for the same video over and over again. It gets boring for me and gets boring for everybody else to talk the same thing. Especially people who have been here. Sujit is asking a Tiffin coffee challenge for US stocks. We do talk about US stocks. You want me to do a Tiffin coffee range challenge for that? It's pretty much the same, man, in terms of concept. Tiffin coffee range is not about a specific market. It is not about a specific stock. It is more about a lifestyle, right? You can use Tiffin coffee range for losing weight. You can use Tiffin coffee range for investing, creating wealth. You can use Tiffin coffee range for reading a book. It's just a mindset we're trying to develop, a mindset of doing increments, like atomic habits, whatever you want to call it, that small increments is what you need to do. So join the group, Sujit. We do talk about Indian stocks in great length there, because most of us who are in that group, including me, I'm sitting in India. But if you're looking for very specifically American stocks to invest in, right, the principle, which is Tiffin coffee, keep watching here, and we'll definitely be talking about here. But you can message me on WhatsApp or Instagram, DM me there, and I will try and offer you some more insights. But do realize a lot of people message me, so it does take me time to get through them. I know a lot of you find it very frustrating. And for those of you who do manage to catch me and I do have a conversation with you, do it. End of the day, a lot of you, what you're failing to do is we talk and we discuss what roadmap should be, and you don't fundamentally get down to doing the work. So, all I can do is motivate you, give you plans, give you ideas. But end of the day, you must sit down and do it yourself. The work has to be done by you. That's why every time I meet you and all of you are like very thankful that I'm doing this. I'm like, no, it's not me. Remember, it's you who's doing the hard work. I'm just here to motivate you and cheer you on. Chandrasekhar Jayaraman wants me to say Anand's affection for PCAR. Yeah, it has a strong moat and Anand loves it. And I don't know, maybe I'll pull him into a video and be rich and make him talk about it. Anyway, definitely something worth considering, bringing Anand onto the channel. I'm sure a lot of you miss him. TCR Investor, again, because I gave feedback on his comment, he's been more generous this time, offering me more comments. Cash versus DCA, what is your strategy versus your strategy? Well, you're absolutely right. Buffett moves in elephants, we move in Patas list. But what puts us together is valuation discipline. Whether it's 500 rupees sipping or $1 billion treasury trade, the principle matters. Don't buy it unless it's worth at that cost. So keep those delta moves going if you want, but you're already thinking like a capital allocator, I guess. So end of the day, it's about discipline more than anything else is what I would say. But also, studying and learning what you're doing and being sure of what you're applying. I don't talk about more, intermediary or expert level things for the simple reason most of the viewers who land up are just beginners. And if I offer something complicated, they might digress and either get scared and move away, or they might do something worse and harm themselves. That's why I try and keep it simple. TCR Investor. And last one, ASG 2019, video on Russian economy. Yeah, what's happening inside Russia and companies is something interesting to look at. Maybe purely in terms of economics, not political. But I appreciate. I'll probably think of doing a video on that too. Anyway, those are about the comments. Basically, what you guys asked me on. That would be Tuesday video. This is a Tuesday evening video. Wednesday's video, I'll try and get the comments done with Thursday's video probably on Friday. Anyway, keep those comments coming. I do appreciate it. I maybe missed a few. If I did miss them, I'm sorry. I do try and cover most of them. And if I did not give the adequate answer which you're hoping for, I'm sorry for that too. But when you do get a chance to meet up with me somewhere here and there, have a conversation with me. Don't get shy and scared and move away. Walk up and shake hands and let's have a conversation. AstraZeneca is what I want to talk about. Lynparza is a drug which I want to talk about. Lynparza is a drug which is very special because it's part of something known as a PARP inhibitor. What does that mean? I'm not going to do a pharmaceutical deep dive into how medicines work, but as an investor, like I said before, you need to know what is this product and what is the potentiality of the product, so you understand the business. You need to understand the business. So for that much, what is this inhibitor about? It targets gene mutations. Cancer is nothing but, a cell mutates and then the body is not able to recognize the mutation and doesn't kill that cell, and that cell manages to slip through the radar and keeps multiplying. This is basically what cancer is in a nutshell. I'm not a doctor, I'm not a medical profession. I'm just talking purely as an investor. Right? This drug stops this mutation cell from multiplying and stops it repairing itself. So it kind of isolates that cell and it allows that cell to die. And it's like cutting the right wires, which we see in those movies, right? Where the guy will be sweating it out and the bomb is ticking and we're reaching down to the final few seconds. So you have to cut the right wire, the blue wire or red wire. This is like that. This drug cuts the right wire, preventing cancer cells from multiplying. It was approved by the European Medical Agency in 2014, and it treats a whole variety of cancers. But what is great is it helps in treatment of very hard cancers to treat. So it's like a precision medicine, and AstraZeneca has seen this trend in oncology especially, and Astra is growing in this segment. And this Lynparza generates billions of dollars in revenue for this company, and it has few advantages with this drug. It's premium pricing power with this drug because simply it's incredibly great at increasing lifespan of cancer patients and improving the quality of their life, and it has a strong pipeline with multiple approvals because of almost over a decade since its initial approval. So it has a long product history, and cancer as a disease unfortunately is growing in the world. More and more people are developing cancer. Yes, we do not really understand the reason behind it. We are trying to understand why cancer is becoming more and more in this world. But till we do that and we're able to lower the growth rate of cancer across the world, it is a disease which is going to be very much with us. So drugs like this will definitely help and improve quality of life. So there is a market. I know it sounds really dark, but at the same time, there is a market for this. So it's just not a medicine. It's a model which they've built, and it's data driven, and it's deeply human because you are really helping human beings. So this is basically in a nutshell what AstraZeneca has been making a lot of money on. So let's look at the last quarter, how they're doing, because now we know the moat, we know the product, we understand the business. Now it's time to slowly see if it is in value right now. To look at it, if it is in value right now, we start to study the quarter one, where the revenue is up 10% year on year, EPS is up 21%, and net income is up 34% year on year. Segment wise, they are in oncology, like I said, Lynparza, that is a great drug, it's doing a lot of revenue. Biopharma is something they're in, and there they have a 12% increase in revenue compared to the same quarter last year. And rare diseases is another thing they've been working on, and there's been growth observed there too. Free cash flow stands at $9.35 billion. Debt to equity ratio is at 0.74. That means debt is very low in this company, and you really don't have to worry about interest rate coverage. Red flags is, of course, regulatory risk. Even in China right now, as we're recording this video, they're being investigated by the Chinese government. If you want, you can Google that and read it. Product pipeline, some of the products have been discontinued because they're not as good as they thought they were. So there's a little bit of pressure there. I wouldn't say these red flags are huge, but they're there since we need to discuss them. PE ratio is at 28. PEG ratio is at 1.65, which is reasonable. And PB is also at 10.9, which is also good. Shows confidence from the investors in terms of PEG and PB. Dividend yield is at 2.14. And finally, if you look at it, I think it is pretty reasonable where it is. In the US, it is traded under AZNCF OTC. I've told you about what OTCs are in a previous video. If you do not know what an OTC is, please go read about it. It was on the Swatch video, if I remember right. Currently, the share is being traded at $142. Discounted cash flow puts it at 140, and relative is at 243. That means my intrinsic value is around at 192, which is at 26% undervalued. Historical average makes this stock attractive if I'm looking at the last 5 years, how it's performed. So this is where AstraZeneca stands at. And what is this thing which NATCO? NATCO is looking at entering into this very specific area and space, and especially this drug. So NATCO manages to, wrangle this. You can imagine the revenue stream NATCO will be creating. So all this is there in a separate video, probably in Money Page. But here we are talking purely about AstraZeneca and AstraZeneca as a company and this product line. So I hope you found this video informative and entertaining as always. It was a little longer because I spent quite a bit of time talking about your comments. I hope I managed to answer all your comments and to your satisfaction. If not, put some more comments and I'll try and answer them better next time around. Thanks for watching the video as always. Hope you had a wonderful day and a wonderful evening. And nothing else more to say other than good evening. Thank you.